Hi, and welcome to another end of week wrap from Morgan's Edward Street for Friday, the 21st of July. For a week that's seen the ASX 200 relatively benign in terms of overall gains, it's certainly been nothing but. As Matt will discuss in a minute, the Australian Prudential Regulation Authority, or APRA, put a rocket under the share prices of the big four banks this week. BHP reported an inline fourth quarter report ahead of its full year report in August. And Rio reported a soft second quarter result, which saw poor iron ore price volumes somewhat offset by higher prices. As always, please remember that our comments are general in nature, and please speak to your Edward Street advisor if you wish to know if any of the following stock recommendations suit your personal needs or objectives. To get a more detailed rundown of the week, I'll pass over to Matt Gordon for his summary. Matt?
Thanks, Brad. The market has found some strength this week, like Brad said, mainly thanks to the banking sector. On Wednesday, APRA announced a rise in the amount of capital required on the books for the major banks to 10.5%, which is up from about 9.5% required last December. The banking sector has been under a bit of a cloud prior to this announcement, anticipating higher levels and potentially more capital to be raised, which is not good for return on equity and therefore share prices. As a result, the major banks have bounced up close to 5% since Tuesday, with CBA reaching $85. Morgans have Westpac Bank as their best selection in the sector, with $38 price target, which is 15% above current levels. Over the past couple of weeks, I have been mentioning the stronger Aussie dollars, and the strength continues this week with the dollar trading very close to 80 cents for each US dollar. The RBA released their minutes earlier in the week with some strong commentary around a higher cash rate down the track, suggesting our economy is following the US and Canada and is likely to raise interest rates as the next directional move based on strong unemployment figures. Even though our next move is likely to be up, this will still be unlikely to happen until next year. But nevertheless, it may be a good time to consider your mortgage situation in view of rates likely to move higher in the future. A stronger dollar is likely to change the dynamics for the market and shares with foreign earnings. Off the top of my head, I'd expect to see names like Macquarie Bank, CSL, Aurora, Computershare, Amcor and IPH with weaker share prices as a result of the stronger currency. So just be cautious if you're holding those particular names for now in your portfolio. Thanks, Brad.
Thanks, Matt. On my left, we have Cameron Moule, who will run us through his best idea that we're buying this week. Cameron?
Yeah, thanks, Brad. Today I'll be introducing a buy idea, whereby Morgans do not formally provide research on the stock, and as such, this investment idea is based solely on my own opinion. Afterpay Touch Group, ticker code APT, is a stock that I'll be discussing today and is more speculative in nature and suitable for investors with a higher risk tolerance. Afterpay Touch Group was listed in late June 2017 through the merger of Afterpay and Touch Corp and currently trades at $3.07. Afterpay provides consumers with a unique short-term deferred payment product, allowing them to buy now and pay later. Their technology allows customers to receive their goods via online shopping or in-store and allows payments to be made in 4 instalments over an 8-week period. So how does Afterpay make its money? Whilst Afterpay does not charge interest on transactions, they are reimbursed from the merchant by taking a clip for each transaction. In addition, late charges will be pushed onto the client, and this generates a second revenue stream. This idea, in my view, has legs based on the benefits associated to all parties involved. Firstly, the customer is able to receive their goods immediately. The merchant makes a sale which it may have potentially lost, while Afterpay is remunerated from the merchant when the payment method is implemented. I like this story based on the rapid uptake of merchants and customers alike. Afterpay has demonstrated a strong customer acquisition rate of over 2,500 new customers per day between March and the end of May. This has resulted in over 700,000 active customers now on the platform, with over 5,000 integrated merchants including Myer, Country Road, Officeworks Mac, and my personal favourite, MJ Bale. Afterpay is still in its early days, and as such, there are a lot of added risks associated with the business. Within 12 months, Afterpay is expected to start generating profits as they look to further develop their footprint, whilst also benefiting from the cost-saving synergies from the merger. With only two brokers covering APT, this story has a long way to go and is at least one worth putting on the watch list. Thanks, Brad.
Thanks, Cameron. Well, that wraps up another edition. Please feel free to share this video with any of your colleagues or friends, and hop onto Facebook and visit our new Morgans Edward Street stockbroking page. Finally, if you don't have a web login to the Morgans website, I'd recommend talking to us about signing up and downloading the app, which will keep you up to date with markets. Please speak to your advisor about any of the stocks we've mentioned today, and we'll see you again next week. Thank you.